Alright. What's up, guys? Welcome back to UCR Forest Academy. Once again, you are welcome back to UCR Forest Academy. So, in today's lesson, we'll be talking about liquidity pool in the market, and then we'll try to understand again what is top-down analysis and how we can actually practice top-down analysis. You know, most of you guys might be hearing that name before, or maybe liquidity pool as well. We don't even know how to spot liquidity in the market. Sometimes you go in for a buy or for a sell, the market will tag you out, and later on still went your way. Today's lesson will be covering the reason why all those kind of things are happening to you. Or sometimes you see the market will be buying for a long period of time. You'll be asking yourself, when will this thing even come down? That is what we want to tackle on today's lesson. So you need to understand that this particular topic is still under the market structure lesson that we have been posting the videos since. So please don't forget to go and watch the first session, the second session, the third session. Should in case if this was the first video that brought you to this particular channel, all you have to do is to click on our click on playlist. Once you click on playlist, it's going to direct you to our this thing to the very particular place where we have already stored the videos. You are going to see it here. At the moment I'm making this video, I've not really dropped that very particular stuff here on YouTube. All you have to do is to click on playlist. You're going to see market structure VIP video. Then click on it. You're going to see the first session, the second session, the third session, and the fourth session. I think this one is like the fifth session or like the sixth session. Don't say that the videos are long. Do yourself a favor now and go and watch the videos and understand how to analyze the market. Okay, please, if at the end of a particular video you truly understood what I like, you love what I'm doing here on YouTube, please like and subscribe to my channel, turn on your notification button so that you'll be the first to be notified by YouTube each time I drop a new video. The truth of the matter is that if you fail to turn on the notification button or you fail to subscribe, you won't even know the day that I will drop another useful content again. And maybe at the end of that, maybe when you come across it might be late. So you just have to subscribe, turn on the icon, turn on the button so that you'll be updated every time. Okay, it's a win for all. Do you understand? So you don't have to be stingy to yourself. Also, don't forget to always drop comments on each of the videos. I'll be going through those comments. If there are questions, I will try to reach out to you or maybe try to answer you those questions as well on the comment section. This is a VIP content I'm sharing. Don't forget that our online class registration is still running. My dear, if you have been looking for an online class where you want to learn forex, you will call the mentor on phone, he will pick, you will message him, he will reply, you will ask questions, they will redo videos for you and make sure that you understand that thing, you understand that very particular lesson. Or yeah, all you have to do is to use this very particular number and reach out to us on WhatsApp so that you can get the procedures to register. See, learning forex online can be can be stressful or can be very frustrating because of the kind of mentors we have these days. Some you pay, they will not show up, they will call you to come to Zoom class at the end of the whole day. What they will be saying, they will be very, very confusing. The truth of the matter, you're going to waste data, you're going to waste your time, you'll be there staring at the screen. But think about the very particular one that we mentor you privately. We have different students, we have many number of students, but we have the capacity to mentor each one of them privately. The truth of the matter is that once Mr. A understands the first topic and Mr. B doesn't understand the first topic, there was no need and there's not going to be any need to push Mr. B to understand the first topic. Rather, we are going to take our time to keep mentoring Mr. B to understand that first topic before we can take him over to the second topic that we have already taken the Mr. A to. Do you understand? So that is what you need. We are so patient with you. All you have to do is to reach out to us on WhatsApp, get the details to register. We just give you a particular price. Your part is still low now. All you have to do is to try your best to be part of a particular what academy. Don't say that you don't need a mentor, that after watching this video, that boom, it has you have already understood forex. No. Forex is a lifetime journey and it's a lifetime business, as in it requires a lifetime guidance. And it's not like after 1 month or 2 months we are done with you, we'll keep on mentoring you. All right, so please use the number and reach out to us on WhatsApp. All right, so let's begin with a particular video to start explaining every single thing you need to know about the liquidity in the market and top-down analysis. All right, so now first of all, what is liquidity pool in the market? What is liquidity pool in the market? So liquidity pool in the market is a price level or is a price area where a large number of pending buy or sell orders are placed. Let me repeat myself again. A liquidity pool is a price area where a large number of pending buy or sell orders are placed. Now, this you just you can remember very well that the time I was making that POI video, I told you that a lot of people, like if you meet an experienced trader or you meet your friend that's already learned something about forex, he will tell you, or maybe you won't see him every time on the chart, like trying to press buy and sell every time the person, once the market move up, you enter buy. Once the market start coming down, you enter sell. No, somebody that already have experience of the forex market will never do such thing. He will always tell you that I'm looking out to sell from this zone and I'm looking out to buy from this zone. Right? This is just the simple part of it. He will tell you that he's looking forward to sell from there, he's looking forward to buy from here. So the moment you are looking at it, it's not only you, somebody else is equally looking at that very particular level. And the same way you are looking at it, some people has already placed their pending orders there. They have placed what? Pending orders. Those pending orders, their stop losses are resting above that very particular what high. Let's say you came to the chart, it's looking like this. The market is dropping to the downside this way. The market printed a lower low, a higher low, a lower low, a higher low, a new lower low, and now you are waiting for the market to come up here so that you can enter on a sell and sell to the downside. Now the market is still somewhere around this zone. Then you marked out your zone like this, you marked out your POI, you marked your last candle that led to a BOS, or you marked it out or like a range created order block. It all depends, or maybe what they call it, or with Fibonacci retracement too. Now what you have to do now is to set your pending order. Yeah, the truth of the matter is that it is not only you that is looking at the particular zone to sell from. A lot of people are equally looking at that zone to sell the forex market from there. They are looking at to sell the price from there. So since you are looking at this thing you're going to do, you have to place your pending order here, stop loss above the zone. Stop loss what? Above the zone. So the moment you see this kind of thing, you need to wait for price to return back to that very particular zone to trigger you on a sell to drop to the downside. Now we're going to be using XNext backtesting tool. We're going to use this particular XNext backtesting tool to backtest some of the particular thing that I will teach you on today's lesson, some different pairs, and then see whether this thing really played out or not, or whether this thing is working. Okay, don't worry, we're going to do that. So the moment you are waiting for this, just know that the price will always want to create a series of higher highs. Price will just be playing around like this. You might see price come up, the next thing price will start consolidating like this. You yourself might think that this thing might not work, this thing might not play out. Now the truth of the matter is that at the end of the particular video, you understand what price is actually doing here. So when you have done this kind of thing, you have already placed your pending orders, another person has placed his pending order, another person has equally placed his pending orders, and a lot of you guys are really waiting for the market to come up here so that you can sell to the downside. These pools often form above a resistance level or below the support level, and it always acts as magnets for price movement. It always acts as what? As magnets for price movement. Now, if you can remember vividly when I was explaining points of interest, and I tried to explain a mitigated point of interest and unmitigated point of interest, I told you that market always seek for liquidities, and market will always want to go and rebalance that unmitigated point of interest, because that very place has a lot of liquidities and has given the market a lot of reasons to come back to that zone. Do you understand? So that's why that zone will always act as magnet. You know what is a magnet, right? If you keep an iron and keep a magnet now, the magnet will just get it immediately, right? So that is what I meant. So if you are to understand liquidity pool, what they are. Liquidity pools represent areas where institutional traders, smart money, can execute large number of orders without causing a significant slippage. These areas often align with swing highs and swing lows or consolidation zones. Do you understand? Let me come again and to re-explain everything I've said now. So liquidity pool represent areas where institutional traders, smart monies, can execute large number of orders without causing a significant price slippage. Now, I just want you to remember during the time I was teaching you guys Fibonacci retracement tool, I gave you guys a simple example. I told you that let's say you walk into a shopping mall today, you came to purchase something else. All of a sudden, you saw an expensive item. Maybe you saw an iPhone 16 Pro Max being sold at the rate of maybe 1.6 million naira, or let's use dollar as a, like, let's use dollar. Let's say you came and you saw that the price is being sold for around, let's say it was being sold around 500 USD. For that particular phase that you came, it was sold for around 500 USD. You don't even have any interest because the price is still very high. Maybe what you have in your bank account is just this. Look at what you have in your bank account. And this thing include your feeding, including your expenses. A lot of things are under this particular money, and you don't even want to spend it. Do you understand? You can see the price of the phone is bigger than your worth at the time. Then let's say the next week you came back, you realize that something that you saw at the rate of 500 is now being sold at the rate of two, or maybe something like 400, and they say they give a discount. Then you look at it, they give a discount 400. This makes sense. So, oh God, I wish you will not tell yourself, I wish I had a phone. Maybe that time your this thing, your what is now around, let's say around 280. You can't spend this because you don't even if you go and borrow, you won't, maybe you might not find the idea to want to spend a particular what money. And then let's say the third week you came back, you realize that the same item they have given a massive discount, which is just the price is now at 250. The moment you see this thing, maybe your worth is somewhere around 250 that very particular time. Now you are going to look at yourself and say, would I allow this very particular 50% discount to slip over? No. You might want to buy that very particular thing. There will be a urge to buy. But if you're the type that doesn't like borrowing, you might not want to buy. But if you're the type that love borrowing, you might reach out to your friend and say, please, I see something I want to buy. Please, can you lend me some money? Then you might get it. Some people will get it at that price. Remember, some people that saw this thing at 500 might have bought this phone. Some people that saw this thing at 400 have already gotten it. Some people that saw this thing at 250, you cannot compare the number of people that saw it at 250, that bought it at the rate of 250, to compare with this number of people. Let's say the people that bought it at 50, let's say people that bought it at 50, let's take this thing back. Don't worry, there's a place I'm heading to, and I just want you to follow me. You are going to see a practical example of what I meant. So people that bought this thing at 500 could be like 10, can be like 10 people. Then the next thing again is people that will buy this thing at the rate of 400 can be like 30 people. Now, people that bought this thing at the rate of 250 will be like more than 100 people. Do you understand? So you could see as the price is coming down, the same way that a lot of buyers are stepping in to buy. They don't want to allow the price, as in they feel that this okay, the price is now okay. Let me go and buy. I will make profit. And you know that the moment you bought that phone, you automatically have a phone that's worth 500 USD. So when you get it at such discount, you wouldn't want it to miss. Do you understand? So let's say you join them and bought it at 250, then you came back the next week, you realize that what the thing you bought for 250 is now at the rate of 150. Is now at the rate of what? 150, as in they gave a massive discount, and maybe your what then, maybe you have like 50 USD. You don't want to buy again. You don't want to what buy again. Maybe you have a friend that's accompanying that came with you, maybe that followed you to the mall that day, that saw the price at 250, that didn't want to buy actually. You don't want to buy, then was like, I don't need it actually. Then he came back, then both of you came back to the mall. The next day, you found a long queue, a lot of people, and they say, what is happening here? They say, this phone is being sold at 150. Everything is very okay with the phone. Believe me, that your friend will join the queue, and you might not want to join the queue because you already have the same phone with you. So you will not really find the idea to buy, but he will now want to buy, because why would he want to buy? The price is so low. They have given a massive discount, and he wouldn't want to miss out. And that's why you might see like 1,000 number of people that want to buy at that period of time. So the reason and the idea behind all those things is what is these people that were buying here have been able to liquidate all these people. Let's say after the next week or maybe after 2 weeks, now the price of the new phone has gone back to 500 USD. The price of the new phone has gone. Maybe they gave it like, maybe the new price of the phone is now 550. It's now what, 550 now. Believe me that it is not the same profit that you made is same profit that the person that bought at the rate of 500 made. The person that bought at the rate of 500 just made 50. The person that bought at the rate of 400 just made, I think he made somewhere around 150. The person that bought at the rate of 250 still made a very good profit, but they cannot compare the profit you yourself made. So you see, you bought at a more lower price, while them themselves didn't buy it at a more lower price, and you made most profit. If you decide to sell the phone that very particular time, you have made like 2 or 3 times of your profit. So this is what we mean by liquidity in the market. Liquidity in the what? In the market. The smart money traders will always want to create an early opportunities. They want to create a chance that looks like they are going to go in for a buy. They will create orders. These people that were doing this kind of thing, they knew that they are going to definitely bring down the price to 150, but they want to start very early. They don't want to just push it down to 150 immediately, because they know that there's going to be a large number of crowd, and they don't want you to enter with them. They want a lot of, they want to make more profit before they will now go in at a later price level. So the moment they created it for 500, some people will buy. For 400, some people will buy. Then for 250, some people, large number of people will want to go in for a buy. Then at 150, you cannot compare the number of people that want to go in there to compare with all these ones. Do you understand now? So that is what you need to understand by liquidity. So when the price start moving up, they have already liquidated all these people. These people that bought at this price will start regretting why they never waited for the fourth week so that they can be able to purchase price at a more lower level. So I'm trying to use this example to tell you guys the importance of liquidity in the market. So these guys has made more profit from this guy, from what, from these very particular people. So now, what type of liquidities do we have in the forex market? We have what we call buy side liquidity, and we have what we call sell side liquidity. You know what we do on the forex market is that we buy and sell, right? We buy and sell. We buy or we sell. We don't buy and sell at the same time. We buy, and at the later on we sell, just like as we were fortunate enough and we bought the iPhone at 150. When price went up, we now sold, right? We did not do this thing. We waited for some time. Maybe waited like 1 week or 2 weeks to sell it back at a better profit level, right? So that's what we do on the forex market. So when we consider about the what buy side liquidity, buy side liquidity is formed above a resistance levels where stop losses, orders from sellers and buyer. Okay, let me explain. Let me use the diagram to explain this part. I don't need to read it out. Let me use the diagram. So let's say you came to the chart, price is pushing to the upside like this. Price printed a new higher high, a new higher low, and then price is trying to break above this high. You know, it's not as simple as that. Price will now have to give, it came around here and now give a little retracement like this. The next thing, price will now boom break above the high. Now you will see price coming back like this. Now price came, retested this particular level, pushed to the upside. Then the next thing, you now see price returning back to respect this particular level. Again, we see price again pushing to the upside like this. Now break a structure. Now price is now coming back. Don't worry, I'm going to explain something to you guys now. I'm going to explain something. Now price will now come and clear all the stop losses that is resting here. Now there were a lot of people that went in for a buy here, waiting for a buy here, waiting for a buy here, waiting for a buy here. Now the moment these people, when the market is coming back like this, they are expecting the market to respect the particular level to keep pushing to the upside. They are expecting the market to respect the particular level to keep pushing to the upside. All of a sudden, price now deep in and clear all their stop losses and did what? Cleared all their stop losses like this. When price cleared all their stop losses, the next thing you start seeing price pushing to the upside like this. Now price break above. Now when this kind of thing happened, it's going to be very painful that price took you out and still went your direction. This is what we call buy side liquidity has been taken. Buy side what liquidity has been what has been taken. This is what we call buy side liquidity, or some people call it an old low. Some people call it what? An old low. I think market shorter traders normally call it old low, or you can call it buy side liquidity. There are three names. There are three names you can call it. You can call it buy side liquidity. This buy side. Let me write it down. Buy side liquidity. The abbreviation of it is BSL. That is it. Do you understand? Or you can call it, old low, old low, old low, or you can call it this in sweep of liquidity. I can call it sweep of liquidity. Sorry, I didn't write this off. The sweep of liquidity, or you can still call it stop hunt. You can still call it what? Stop hunt. Can you just see the numerous English they gave just this very particular thing? Just imagine. And this is what they normally use to confuse you guys. At the end of the whole day, you might think that this is not what you know. You start to relearn again. This is just the same thing. Do you understand? So this very particular thing that happened there, has price tanked all of them out and still went to their direction. You can call it buy side liquidity, old low, or sweep of liquidity, or stop hunt. Okay, so now we can see we have now a full break above like this. This is now a BOS. This is now what? A BOS. So now the moment price now does the kind of thing, we have now considered that the buy side liquidity has been taken. So what about the, because we know that people went in for a buy here, and their stop losses are resting here. So price has now swept them what out. So what about the sell? What about the sell? I'm still going to show you guys on the chart how this thing looks like. Then we will now try to use it to analyze the market. So what we mean by sell side liquidity, this one is when price has taken out the stop losses of the previous sell traders, the stop losses of the sellers, of the previous long-term sellers or whatever. So it's just like an inverse of this. When price, we see price coming down to the downside like this, price will print a new, sorry, let me copy that in again. Price will now print a new high. The next thing, price will now start consolidating like this. Next thing, price will now wants to return back, mitigate here. Price will keep dropping to the downside like this. Next thing, then, okay, sorry about this very particular mouse. Next thing, price will now push up aggressively and clear all their stop losses and do what? And clear all their stop. The moment price clear all their stop losses, the next you see price dropping massively to the downside. So this is what we call what? This is what we call sell side liquidity. We call it what? Sell side liquidity has been taken. Or you can still call this sell side liquidity an old high. And what? There is what? Here is an old high, or you can still call it an old high. You can still call it an old high. First of all, you can call it sell side liquidity. Liquidity, yeah, liquidity. You can call it a sell side liquidity, or if you can write it SL. And then the next thing, I think you can call it old high, old, old high, or you can still call it sweep of liquidity, sweep of liquidity. Hey, what is this? Sorry about my spelling, no, don't mind me. Sweep of liquidity, or you can still call it stop hunt. So this is just all the names. This is just all the names they give to one thing. Now let me draw you guys, like let me take you back. Let me take you guys back to when I was telling you guys what is accumulation, manipulation, distribution. Right? And remember the part I was telling you guys: accumulation, manipulation, distribution. That part we talked about consolidation phase, uptrend phase, and the downtrend phase. What just happened is what we call accumulation. What just happened is what we call what? Accumulation. And price has spiked above that zone to collect liquidities. And the next thing now, price is dropping to the downside. So you don't need to go in for any buy because it's that price is breaking above. You don't know how long that kind of thing will happen. All you have to do is to wait to see the direction of that particular market. The moment price breaks below and break a structure, all you have to do is to wait for retracement to keep selling. So you see, like all these things are all the same. So the moment you call this thing any of these names, that is what is already what is. So now this is what we mean by the two main types of liquidity when we have a buy side liquidity or a sell side liquidity. Then when we move more deeper, or when we dive in more deeper about this very particular liquidity of a thing, you need to understand that price seeks for liquidity, and it will always look to go and grab liquidity like what happened here. In fact, this kind of thing is equally still called liquidity grab. It's still called what? Liquidity grab. Always know that it's so that you may not one day now somebody be telling you liquidity grab on this, that. Please, my dear, that's what it means. So now let's talk about other form of other type of liquidity as well that we can see on the forex market. Now we have what we call an equal low. We have what we call an equal low liquidity, equal low liquidity. We have what we call an trend line liquidity as well. Trend line, okay. Equal low and equal high liquidity, and equal high liquidity. And we have what we call trend line liquidity as well. Trend line liquidity. And then we have what we call the buy side liquidity and the sell side liquidity. So like this is like the three type of liquidity as well. We have equal low liquidity, equal high liquidity, and trend line liquidity. So this is it. So now how does this equal low liquidity works now? Now looking at the market now, these guys are very funny. This equal low liquidity is what I call inducement. I call it what? Inducement. Now remember, before I proceed to a particular part, I told you that when price cleared all the stop losses of the previous sell side liquidity or the buy side liquidity, what it did is what we call sweep of liquidity. Here, get the word sweep of liquidity. Now, price went there and cleared all their stop losses. But when you hear about what induce, it means price came and induced you in, seduce you in, gave you something that looked like it's going to happen, but it's not going to happen, entice you to go in for a buy. Why it's not the right time to go in for a buy? Do you understand? Just like the way just like the way they kept on reducing the price of that phone. You don't know the particular price they will reduce it to, and the next thing the price will skyrocket. So that was why you panic and got the phone at 250, only to come back the next week and see that this thing has now gotten to 150. Do you understand now? So now the phone is even losing more value. So you just need to understand that these guys will always want to induce it in, just like the way they induce you to buy the phone at that very particular time. You know, even before you purchase that phone, they were like so many words they wrote on that phone, like 50% discount, 75% discount, offers work from now to 7 days, these and these, and then you start panicking. Please, my friend, borrow me some money. I don't want to miss out on this phone. I want to get this phone now. I want to purchase a land. There's a large discount. Please, I can't miss out. Give me, don't worry, I will pay you back. Now you're even on debt and you're going to pay more interest on top. So you see, that is what this very particular smart money traders normally does. So when we consider induce, this is now when price will print a new high. Then when price is coming back, price will now print a new low. Now for price to break this very particular high, it will just come. Next you see price retracing. Then you see the price want to get here. The next thing you see price break above. When price break above, price might even come back to respect the previous resistance turn support. Early buyers will step in and take price to the upside, thinking that it is now the right time to go in for a buy. People that bought that thing at 400 is now thinking, let's buy now. I don't want to miss out. This is 400 or $100 is not here. Buy now, buy now. Then you bought. All of a sudden, price now take you out, and then price now retrace up to that 250. Then most of you again will go in again. You know, you're now going for a buy. The next thing again, price will now go up a little, and then now they will now take you out, mitigate the extreme low, which is here, and then they will now push again to the upside. Now, before they will even push to the upside, they will try to create another low like this. They will try to keep on, maybe they'll be consolidating around there. You'll be thinking that what is going to happen, where is it going to go? The next thing price now push to the upside. Now, I will explain what really happened here. And let's lock up this. So what really happened here is that this is your extreme point of interest here. This is your extreme point of interest that is here, your unmitigated zone that is here. And this is what we call an equal low inducement. We call this thing what? An equal low inducement. Always know that it is not going to be, it's not mandated, it's going to be like equal. This low will be the same thing as this low. No. Sometimes it can be the same thing. Sometimes it might not be what? It might not be the same thing. Do you understand? So, but this is what we mean by what? Equal low inducement. And the moment you know that I told you guys before you start marking at POY, you need to break a structure. You need to what? You need to break a structure. So you can see this POY retrace, pulled back a little, and now finally broke a structure to the upside like this. Broke a structure. So this is a BOS. So this is a BOS now. So now this will be treated as what? Inducement and not an entry point, and not a place where you say I will buy here, I will buy here. Don't say that. You just have to have one specific place you want to go in for a buy or a sell, and it should be from an unmitigated zone. So this is an equal low inducement, and when the moment price has done it, people that enter this buy here, their stop losses are resting below here. Their stop losses are what? Are resting below here, and the moment price takes them out, it will start going to the upside. Do you understand? So these are the people that bought at the rate of 150 and they have made more profit. Okay, so this is the marketing strategy for you. This is an inducement. This is the place they have seduced you in. You have seen that you think that the price is going to go up. Why it's not going to want to go up? The same thing they have done to you here. Now they have went off and they have accumulated a lot of orders here. A lot of stop losses is resting below here. A lot of stop losses is under below this low. A lot of stop losses. Now you have seen that price trades accumulated. The time came price spike above that zone and break that very particular zone with a full body candle. Now the moment you see this kind of thing, that is now when you have to retrace back to the unmitigated zone, relieve all these things. This is accumulated price, and this is a lot of stop losses is resting below here. And with your last candle that led to that BOS, you mark it here and wait for price to return back to that very particular what zone. Calling here what inducement, calling here what inducement. So this is what you could see. This is what you're going to see. Where price will start returning back like this. Price might even come test that very particular zone, respect it, try to push to the upside. They'll think that this is going to buy. Might even the next thing, pam, the price will just tap in and then push aggressively to the what to the upside. So the moment this kind of thing happen now, this is what we call inducement has been cleared and price has tapped into our zone. So now let's now compare the let's now look at how this thing looks like in terms of sell. Or let me complete for this buy before I move to the bearish part of it. So now we have a BOS now. We have a what? We have a BOS. Anytime that you are trying to mark out a zone or you spotted a BOS and you cannot see an inducement before that BOS, an inducement are always the failed retracement in front of your BOS. You can't see an inducement in front of that BOS. Run, you are the inducement. Run, you are the what? You are the just like in this very particular case. You saw a massive, maybe this thing is news, price push aggressively to the upside. Now you went and mark out your zone like this. You went and what and mark out your zone. Now this thing started coming back with force. This thing started was coming back with force this way. Started coming back with force. Next thing you see price. Next thing, boom, price takes you out. Then you see, what happened? This is not inducement. This is not really an inducement. This is not really what an inducement. There was no way this can be called an inducement. The moment price takes you out, next thing you see price pushing to the upside like this. You see, and then you'll be so worried and say, what's the meaning of this nonsense? What is this? This FOREX is scam, this, that. What really happened is because you didn't see a proper inducement, and that was the reason why price cleared you. Again, what price did, that price just came to sweep liquidities below the very particular low. Price came to what? Sweep liquidities below the very particular what low. And what kind of liquidity the price swept here is what we call buy side liquidity. Buy side what? Liquidity, and now we can now see price pushing to the upside. Now, where is our new point of interest? Our new point of interest is that very particular candle here, and here will now serve as our what? As our inducement. As our what? Inducement. You can see. And now you can see that price equally what break a structure to the upside. You can see that price what break a structure to the upside. So now this is what I mean by inducement. This is what I mean by what inducement. So you can picture that again and try to go over the particular part. You can play price backward so as to understand. As for the VIP student, please don't worry. More videos to this will come if it should, in case if you have any questions. So this is what we call what buy side liquidity. In terms of a downtrend market, just like an inverse of this. It's just like what an inverse of this, where price will do this kind of thing. You see price print a new high, price will now break the low, price will now try to come back. It will now be respecting the previous resistance, the previous support, stone resistance. Next thing you start seeing price doing something that look like this. Next thing price might even want to break. So that you even see them breaking another structure. You might think that this zone has failed. The zone has not failed. Next thing price will return back, sell a little, mitigate that zone, and now drop to the downside. Create another inducement for what? For another people as well to create another inducement. When price breaks now, price will now return back again and start dropping. Now, a time will come, price will want to sweep above all the liquidities above that zone, and then you will now see. The truth of the matter I want you to know is that sweep of liquidity is not as the same as change of character. Sweep of liquidity is normally happens with a week. It's always happen what with a week, not with what, not with a full body candle. They always spike above that zone with a week. Just take note of that, okay? They always spike above that zone with a week. But for now, this is what we mean by what inducement. This is what we mean by inducement. And here is your higher time frame point of interest. may have refined, you enter from here, you target to the downside. These are our new inducement as well. These are our equal high inducement, and these are our new unmitigated time frame zone inducement. So, and this is now our clear of liquidity. So, okay, this is how it looks like. Don't forget that your point of interest must actually what break a short or so. Let's now go to the chart to see how we can be able to spot all those zones. Now let's use euro, let's use a particular GDP JPY. We equally use Euro USD as well. We equally use Euro USD to explain the particular stuff. I think we are going to concentrate on here. So now let's go to SNES at GDP JPY, then try to see how the market played out that very particular one. So all right, exercise some patience while I bring up that very particular pair. The name of that pair is GDP JPY. Okay, let me add it. Don't worry, let me add the pair. So let's start for GDP JPY. Let's start to look at it here. So GDP JPY. So now I'll search for it, and then it's already somewhere around here. I think already here. So let's open it. I will flip through many. I will go through many pairs. I will go through many pairs. Don't worry. I will go through many pairs about it. So now this is GDP JPY on 1 hour time frame. I will have to use 4 hour time frame just to compress the chart more so that it will be very very easy for me to analyze the market. So now this is. I will try to hide the particular part. Let me hide here. Hey, it's gonna take time. Oh. All right, so let's just exercise some patience. Why that very particular thing load. So please stick around the video, watch to the end. Don't forget that our online class registration is still running. All you have to do is to use the number that is on the description below or the one on the screen and reach out to us on WhatsApp so that you can get the details on how to join our online class. This is you will get more information. You'll be exposed to this. You will understand the forex market in a more simple and a more complex manner. You wouldn't be stressing yourself in analyzing the market. You get an early information of what the market wants to do, and you stay out from all this unnecessary noise. Okay, so this is GDP JPY on this thing on 4 hour time frame. We could see that the market printed. I want to delete all these things. Okay, look at it here. So we now have a BOS here. We have a BOS somewhere around the particular zone. Remember, we are more interested in marking out our liquidity based areas, and then we try to understand what the market did there. What's meaning of this? So now we lock the particular stuff. So this is a higher time frame BOS. This happened on 4 hour time frame. And remember what I told you, anytime that price breaks a higher time frame low, you need to expect a full retracement. You need to expect what? A full retracement. So that is it. So I have to remove the particular thing and play price forward to see what price is going to do. Now, number one thing is that after price break this low, price try to come up, early sellers push price down. But I'm not really interested in what is really happening here. You're going to ask me, for crying out loud, this is 4 hour time frame. Yes, we know it's 4 hour time frame. But the moment that price is doing this thing, you just have to go to other pairs. You just have to go to other pairs. You will see opportunities. Now, the moment I've seen this thing, this failed retracement, I have already confirmed that this my zone will hold. Now, where is my new point of interest? Remember, I told you that you can mark out your point of interest with a Fibonacci retracement tool like this. And you mark out the 78% zone like this. Remember to activate the half of the middle line. Remember to activate the half of that very particular point of interest, as in the half of the very particular middle line. Remember to activate it. Or you can still mark out the last last candle that led to a BOS. Currently here, there is no last candle that led to BOS. Instead, what we have here are range or consolidation phase candles or consolidation candles here is what we have here. So now let's play price forward to see what really happens, to see whether price really get to that zone. So now we play price forward. So what exactly is this? All these things are what? You see, from here alone, self is the inducement area. This place is the inducement area. I don't even want to talk about these particular guys here because I know that these guys that are taking sells and buy here are early sellers. So even if you want to refine the zone, which by making use of the half of the zone, which is this, you want to make use of the half of the zone, Just place your entry at the half like this, and then stop loss above the zone, and then TP. Remember to have a good risk to reward ratio than targeting to your village. Remember to have a good risk to reward ratio. So I'm going to refine it down to that very particular place. So remember, I will refine it down to this very particular half of this time frame because I want to refine like this. This is how to refine. So I've reduced it to the half of that very particular 4-hour time frame zone. I'm still on 4-hour time frame, but if you remember what I told you guys on POY, that anytime you mark your zone on 4-hour time frame, as long as this very particular middle line is concerned, the half of it is the 2-hour time frame zone. So you play price forward. Now price has triggered our order. Price has triggered our order. Let's see what really happened here. Now price is dropping to the downside. Let's see whether we made profit. So what really happened here is what we call an unmitigated zone here, and this is our liquidity. This is our inducement area somewhere around here. Even the inducement area is even here. So look at the inducement area here. This is the inducement area, or some of you can equally end up marking here as an inducement area because these are early sellers. These are what early sellers. So you see, let's play price forward to see whether price actually hits TP, and then now, finally, we have had TP hit here. We have had TP hit. So the next setup I want to check out is Euro card. Okay, this thing has not, I over target this very particular thing. So you see, price has what? Price really played out very well here. So let's see whether we can even, let me take out this thing like this. Let me keep this thing like this. So we have a point of, it looks like we have a point of interest around this zone. It looks like we have a point of interest around this very particular zone. Let's see what happens. Do we have an inducement around here? This seems to be an inducement. This thing looks like things. You know, this is a 4-hour time frame. That is it. It's a 4-hour time frame. But let's see what really happened around here. Let's see what happened around here. So let's play price forward. So nice one. So this is where the current market is. This is where the market has closed. So look at where the market is. So what I can see here is a equal high inducement. Very nice. So this is like an equal high inducement. A lot of stop losses are resting above the particular high. So I'm just going to place my opinion on that like this, or you can decide to use the half of it to anyone best for you. So you keep your entry like this, and then keep your stop loss. Just keep your TP. Remember to have a good reach to the world. Please don't target your village. Okay. So now this is it now. So now we lock it up and wait for the market to open to see what is going on, what is going to happen. The reason why we want to sell from here is because we have what we call a BOS here, and we have an inducement. We have what? An inducement in the front of it. And what is here? What is here now? What is here? We could see that we even have a clear of liquidity around the particular zone. Now, why do I call the particular thing a clear of liquidity? Look at what I mean. Why do I call the particular thing a clear of liquidity? Okay, it's not really. This thing is not seen well. It's not seen well, but I'm going to take you guys, although it happened, but it's not really clear. Something that look like this. It's happened, but it's not really clear. It's not really clear. I can't really take this as clear, but it's like a clear of liquidity because price took out all the stop losses. These guys that were trying to sell the market, the fact you saw this red candle mean that there were people that had the same information like you. They knew that this market is going to sell. So they went in for a sell. The stop losses are above, but this thing had to go up and tag them out and still went there. Directions, things like that normally happen. Now let's look at this BTC setup before we look at Euro card very fast to try to mark out all those zones. Now let's try to log the charts. Let's try to remove some parts in the charts as well. So let's stay on 4-hour time frame. It's very important. The reason why I want to be on 4-hour time frame is because I just want to oh, let's just stay on 1-hour time frame though. All right, look at what happened here on BTC USD. Look at what happened here. So look, as price came down, we have this is what we call a clear of liquidity around this zone. This is what we call a clear of liquidity. Can you see? This is what we call a clear of liquidity. After all this accumulation that happened there, after all these accumulations that happened there, price spike above it and collected all their stop losses. You see, this week is a very big statement. This particular week now Is a week you should be looking at. I normally call this very particular week a hidden zone. I call it what? A hidden zone, because I know that when you go over to other time frames like a 1 hour time frames or something like a 15 minute or 30 minutes time frame, like let me even use 1 hour time frame, you will see that the half of the very particular week is a 1 hour time frame order block. It's like a 1 hour time frame full bodied candle. Let me show you. It's a 1 hour time frame full body candle. Look at it here. So look at it now. Look at the half of it. So look at that very particular half, though it is not really, but look at the candle here. I'll have to refine it down to the particular candle. So now when you refine it down to that very particular candle, if it's still scaled down to 30 minutes time frame, let's use 30 minutes time frame as well to see that very thing I want to tell you. You see what I mean by hidden zone. You see what I mean by hidden zone. Hidden zone is when you spot a week on 4 hour time frame, only for you to scale down to something like 30 minutes time frame, or you scale down to 1 hour time frame. You come to realize that that thing is a full body candle. The half of that week is a full body what candle. Now look at that week we marked out. Look at that week. Now look at the very particular candle. Remember what I told you guys about the last candle that led to a BOL. Let me remove it. So you can see that candle here. Can you see that candle? Look at that candle. That candle is a order block, or that candle can be called a what they call it, a POI. So I keep it this way. Oh, sorry. So this time around, I'm marking out the last candle that led to that BOS, which is like this. Okay. So now let's try to squeeze the start to see whether we really had an inducement in front of it. I don't want to play price forward again, because if this is BTC, the chart is going to take some time to get to that very particular level. So but let's just look at it this very particular way. So I try to compress the chart. So what really happened around here is what we call inducement. We call what inducement, and the fact that here is an inducement is that, let me tell you what really happened here. This particular place there is a higher time frame zone. Oh, is a what? Is a higher time frame zone. The market has been switched, has been respecting this zone on higher time frame. Has been what? Has been respecting this zone. When you see the market come up here, these are 4 hour time frame the market has been respecting. But because you refine the zone and now you have spotted your point of interest around there, you can see we have your what? We have your clear of liquidity here. We have your point of interest. Sometimes if you see your setup complete like this, the moment you see a clear of liquidity, you see a point of interest this way, just laugh, because there's a higher tendency that setup will play out. So you see, after some period of time, the people that had all their stop losses are above this zone, price has tagged them out, and price has sold massively to the downside. So does it mean that this thing will continue selling to the downside? Maybe when the market opens, we make the analysis and see whether it's going to continue selling to the downside. So let's try one more examples before we end the video. Let's use Euro USD and try to see this very particular thing again. Okay, so this is Euro USD. I will try to hide the chart again. Let's try to cover the very particular part. Let's keep it here because I don't want to delay too much. So it's coming. So this is like how you can use an XNES free backtesting tool. And just log into XNES, you backtest for free. Okay. So this is Euro USD on 4 hour time frame. We can clearly see that the market is bearish, right? The market is clearly bearish. Okay, so now we can see. So you can see the market is clearly bearish on 4 hour time frame. I think we should be looking for a way to buy. But what can you see here? Let's say we came to the chart and it's looking like this. What really happened there is what we call a higher time frame change of character has just happened there. A higher time frame what change of character has happened there, and you can see the market has broken above that high with a full body candle. Now, where is my unmitigated zone? Now, if you look at this whole thing now, if you look at this from here, the market went to the upside, consolidated, and then before it pushed again to the upside. Now, look at what happened there. There is a clear of liquidity. If I go to daily time frame, what you can see here is a week. Let's see that pair here. Let's see that pair here, so that you will get to know what I'm talking about. All right, so let's go to daily time frame. So look at it on daily time frame. I will try to clear everything here. So look at that very particular candle I told you I marked out on before on that SNES. We are somewhere around here, and we spotted that the market has actually broke a shoulder to the upside. This is on daily time frame. Oh. The market has given what a change of character. And look at the full body candle that confirmed that this is a change of character. Do you understand? And even if there was any zone that I would even be wanting to looking for any sell, I think I should be looking at a particular zone here. Give a particular zone around a particular zone should have been a zone I'll be looking forward to sell. This I know that this is a daily time frame, but when I scale down to 4 hour time frame, I will refine. I don't even need to refine it. If I just need to use the half of it, because the half of a particular daily candle is the half of is the 4 hour time frame order block or POY. So you see, even this one has a clear liquidity as well. It has a clear of liquidity this way. Can you see it has a clear of liquidity? It's when price cleared all the stop losses of the previous traders as well. The next thing we have a full body candle, and we now have an equal high inducement. Right, very good setup. Equal high inducement is here. Equal high what inducement is here. So all I have to do is number one, if I'm to follow the trend, I'll just have to wait for the market to come here, place my stop loss above. This time around, I'm just risking around 47 pips, and I need to target this for 7 pips like 3 times. I will target it like 3 times, like 4 times actually. Maybe later on I'll use that calculation. My head is full. So now let's leave it this way. So this is how we have refined it, because we can't really go in within a particular daily time frame POY. But because of the sake of that place we are in on this SNES, we see that price has changed character. And while price is trying to come up here, we can see we have another clear of liquidity here. So do you know what I did on daily time frame? I just had to mark out this candle. I marked out this candle, and then I was more concentrated on trading from the half of that very particular candle, because I know that the half of that candle is a 4 hour time frame point of interest, and that was the reason why you see when price came, price accumulated. This accumulation is what we call inducement. This is not an entry opportunity. This is not what an entry what opportunity. This is an inducement, and you could see that. Look at your unmitigated time frame point of interest. On daily time frame, sales price tested, test the half of it, and started pushing to the upside. Now we are now facing the particular was set up. So this is like everything I have for you guys in terms of liquidity pool, and in terms of what understanding how to spot different types of liquidity in the forex market. Although we didn't really explain in terms of trend line liquidity, but you just need to understand that this trend line liquidity is not as different as this particular Euro USD liquidities here, this equal highs. Or let me show you guys on BTC USD again. I think there was a trade I took on BTC USD that has a series of trend line liquidity. Let me show you guys here, so that let's conclude all the etc., so that you will not hold me on account of anything. Okay. So now this is it now. So I have this setup here. I have the particular setup. Look, I'm targeting the week. This is what we call a hidden zone. I'm targeting the week. This is what we call a what? A hidden zone. This week is a 30 minutes what? Order block, or a 30 minutes POY. Do you understand? So we'll look at what I call a trend line liquidity. Trend line liquidity. Can you see that? So this is what we call a trend line liquidity. Let's keep it this way. So you see, whenever price bounce to that trend line, people take it up, bounce, they take it up, bounce, they take it up, bounce. A time came, you no longer bounce again, and tap into my real zone and bought to the upside. So this is what we call a trend line liquidity. And what? A trend line liquidity. So it's as very simple as that. So again, we have other setups as well. So we can see this and everything played out. So for now, this is where we are going to end this particular video. I believe that this particular thing really helped you to understand everything about liquidity, different types of liquidity in the market, what to look at whenever the market has break a structure, how to understand what they call it, unmitigated point of interest and mitigated point of interest, the way to use it in terms of liquidity. Okay. And in the next lesson, we'll be covering top-down analysis. For now, we're going to end a particular video here. I wouldn't want to go more longer than this. In the next video, we'll try to cover top-down analysis, how to analyze the market from higher time frame down to lower time frame in search of a good entry opportunity, or even how to analyze the market from higher time frame down to lower time frame to be able to see how to go in for a buy or a sell using an aggressive method or anything like that, and how to follow the trend very proper. Okay, please don't forget to drop your comment, like, share the video. I'm pleading, please share. If you know you really understood something here, share. I'm begging you, share the video and like the video as well. For now, we are going to bring an end to a particular video. In the next lesson, we'll continue from top down analysis. Thank you, and may God bless you.